Hey everyone, welcome back to another exclusive podcast from IronFX, where we are dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Ketan Ramachandra. Today, we are delving into the outlook for oil as we examine recent trends and anticipate what lies ahead. Let's dive in. In the first quarter of this year, 2024, oil prices staged a remarkable rebound, buoyed by optimism about a global economic rebound, production cuts by major oil producing nations, and unfortunately, geopolitical tensions in the Middle East and the Red Sea. WTI oil tumbled under $70 per barrel in mid December 2023 before stabilizing to rise steadily off this low. It climbed above $82 by the end of the first quarter, and the upward momentum continued till mid April. However, as we progress into the second quarter, oil prices stalled around $87 per barrel and retreated quite significantly amid concerns about weaker demand, uncertainties surrounding global economic growth, and de escalation of the ongoing conflicts in the Middle East and the Red Sea. WTI oil pulled back sharply and fell under $77 per barrel at the beginning of May. WTI oil had dived over 12% at its lowest point by the end of May. The key question on everyone's mind is whether global demand for oil will remain strong in the coming months. While economic indicators such as the composite PMI suggest robust economic activity in many parts of the world, potential headwinds remain for oil demand. Another critical factor to consider is whether OPEC members and their allies will persist with their respective production cuts. In response to falling oil prices in 2023, OPEC and its partners implemented significant production cuts to rebalance the market and support prices. The success of these measures in stabilizing oil prices has led to speculation about the group's future course of action. Will OPEC maintain its disciplined approach to production cuts, or will internal pressures and diverging interests among member countries lead to a change in strategy? The US government is also looking to refill its Strategic Petroleum Reserve, otherwise known as the SPR, which it depleted quite significantly to combat rising oil prices in 2022. Should the US Energy Department aggressively buy oil in the open market over the next few months, it should provide a decent floor for oil prices and at least keep prices elevated above the $80 mark for WTI oil. Right? So we do have to take into account what OPEC is going to do, as well as how aggressively the US government, or rather specifically the US Energy Department, will enter the open market and buy oil to refill its strategic petroleum reserve. In conclusion, the outlook for oil remains uncertain as we navigate a complex landscape of economic, geopolitical, and public policy or government policy actions as well. With recent trends suggest a tentative recovery in oil prices, the path forward is fraught with uncertainties. As investors and stakeholders in the energy sector, it is essential to stay informed, monitor key indicators, and adapt to changing market dynamics. Right, that wraps up today's episode of The Outlook for Oil. We've explored the outlook for oil as we examine the recent trends and anticipate future developments in the energy markets. Join us next time for more insightful discussions on energy, finance, and the global economy. In the meantime, do remember to subscribe to our podcast here at IronFX, where we are dedicated to bringing you the very best education to take your trading to the next level. Until then, happy trading.